Hi, Makotso. I'm getting feedback on my side. I can't hear you clearly. Can you try again?
Yeah, I'm here. I'm here. Hi, Sam.
How are you?
Hello.
Hello, I can hear you, although you're not audible enough on my side.
Oh,
Can you speak
okay.
up a bit? Okay. Let's just
I beg
hold
your
on.
pardon?
No, it's fine. Actually, I'm saying let's just hold on, like until 12:35,
Okay.
because it's only you who has
All
joined.
right.
Just allow the other guys to come in as well. I'll just switch off the video and mute my
Okay, no
mic in the
problem.
meantime. Okay, thank you.
Okay. Thank
Hello, Ethan and Robin. So just to confirm, I rescheduled to start at 12:35 because I had no attendees at 12:30. So we're about to start now, but let me quickly paste in the attendance register, or the link to the register, and then we can get that out of the way. just do that now. Oh, Ethan, most probably that's why then, I'm not seeing you guys yet. So you can complete the register in the meantime. Also you, Robin, and then maybe now it's 12:36. Maybe we can start at 12:40. Just to let those guys who are in FAC 1502 to finish up and join over this side. So we'll start at 12:40. I'll just turn off my video and mute my mic. And this. I think, guys, we can start. Thanks, Ethan, Robin, and Beauty for joining. I'm thinking because the previous class went overboard. The guys can join us while we can join us on the way. So I'll start so that I also finish in time. So I'm already sharing my screen. I'll get to the crux of today's presentation. Or actually, before I do that, or actually, I'm gonna do it again later. I'm pasting the link to the attendance register. So just to confirm, we in the class for AUE 1501, Introduction to Auditing, And then just as per norm, housekeeping, to please switch off your video, to mute your mic. You can either use the raise hand feature or unmute your mic if you want to ask a question or give a comment. And then, as I've said, I will post the link again for the attendance register during the session. And towards the end of the session, I will paste the attendance register again and the feedback form. And if you should have any study related queries, you can send an email to cityandtat@unisa.ac.za. Today's session, we will recap on what we did for the previous session. We're gonna go to our to-do list, and then we will start today's topic, which is topic 3, the external auditor, which I have made a brief introduction last week when we did the internal auditor, and on the study guide, it's on page 51. So first things first, let's first recap on what we did for the previous session. So we touched on internal control, and we looked at what internal control is. This was from page 25 of the study guide. And one thing to note there was specifically risk needs to be defined, it needs to be identified, it needs to be assessed and controlled. And obviously, as we said, we need to mitigate risk that would hamper the production of the company. We also touched a little bit on the inherent limitations of internal control, for example, your cost versus the benefit, the potential of human error. There was about 6 that we looked at. And then, as I said, point 3.4 and 3.5 was for self-study, but we'll touch on now on our to-do list. We also looked at the introduction to internal auditing. This was from page 35 of the study guide, and how it entails or how it fits into the organization. We looked at that diagram on page 36, where we talked about the chief audit, actually on page 37. We looked at the chief audit executive being part of the executive management in line with the CEO, the CFO. Some companies have got CIOs, which are chief investment officers. We also looked at external audit in a nutshell, which will be the crux of today's session. Internal auditing, what are the responsibilities? And there was a document that I shared, if you can allow me to open that document. The document we shared last week was all in a day's work, where we looked at the responsibilities and functions of the internal audit. If I can just scroll through to give you an idea again. So I've also saved this on the notes folder for this module. I'll go through it now on how to access it. So we looked at what is internal auditing, it being an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. For a description of those words, for example, what independent objective assurance mean, you can refer to page 38. It has been defined there. We also looked at who are internal auditors. We touched more on the left-hand side, looking at the characteristics or the significant features of internal auditors, touched a bit on external auditors. We also looked at the responsibilities of the internal auditor. We looked at that. Also carried through to the next page. I'll go through now on exactly where is it saved. We also, actually, I also asked you to look at the role of the Institute of Internal Auditors. This was from page 39 to page 40 as self-study. But one thing to note from there was specifically the IPPF Code of Ethics. We looked at 4. For the external auditor, we're just going to add 1, which is professional behavior. So this will be exactly the same, but we'll go through it over again. And as confirmed from page 41, this is where we looked at the objectives of internal auditing, who are internal auditors. And then lastly, we looked at the professional conduct requirements for internal auditors. This was linking the internal audit function with the code of ethics, as I've got here as a PDF. And then lastly, we looked at internal audit and good corporate governance, how the two tie up together. Let me go back to my presentation. We looked at the responsibilities of the internal auditor, the professional conduct requirements for internal auditors, that was the ethics, and the internal audit and corporate governance, tying the two together. So specifically with the last one, internal audit and corporate governance, that's where, if you recall, when we did corporate governance, we looked at the three principles. Principle one was leadership, principle two was ethics, and principle three was good corporate governance. This is how the two would fit together. And then, as I said, as a to-do list, you had to look at the components of internal control and also the elements of each component of internal control. Are there any questions with regards to those 2 points before we start today's session? So remember, you can unmute your mic, ask a question, or you can send a message on the meeting chat. Okay, I'll assume there's no question since I'm not having any response. So we can continue. Okay, so this was part of us taking a break, but I think it's still early to take a break. But let's look at today's session, which is the external auditor, and what we'll be covering is the development of the external auditing profession. We'll look at the assurance by the external auditor. We'll look at the professional conduct requirements for external auditors and the relationship between internal and external auditors. So we'll just refer back to the All in a Day's Work document, where we looked at significant characteristics of internal and external auditors, but specifically external auditors going into detail on what their characteristics are. And then looking at the first one, development of the external auditing profession, if we can turn our study guides to page 53. So that is where study unit 8 starts for the development of the external auditing profession. So with this one, we'll just go through the study guide as a point of reference, but should the need arise, I will go to the other relevant document or websites. So basically, there's just giving an introduction on what we've covered in the previous study units, that was looking at the King Code of Corporate Governance, in particular internal auditing. And then in the previous section, we looked at the role of the audit committee in the appointment and overseeing of the planning and execution of the external audit. But now we'll look at the operational business environment represented in diagram 5. And if you can turn your pages to diagram 5, or confirm the page now, on basically what we'll be focusing on. Where's diagram 5 now? Diagram 5 is on page 37. So that is where we looked, where we position the internal audit function. So if you remember, I spoke about the external audit and the internal audit providing an assurance. We specifically looked at internal audit, but now we'll look at the external audit, specifically reporting to the audit committee, which is also the chief audit executive, who are responsible for overseeing the audit function of the business, is part of. So we can turn to page 54 on the study guide. So remember, when we spoke about internal auditing, we spoke about the Institute of Internal Auditors, but now speaking about the external audit, we'll speak more about the Auditing Profession Act. So just as an introduction, it says the Auditing Profession Act, which is Act 26 of 2005, referred to as APA, regulates the external auditing profession by instituting the Independent Regulatory Board for Auditors, which is IRBA, which has the responsibility of controlling the auditing profession in South Africa. In other words, APA created IRBA. An external auditor has to complete the education, training, and professional requirements before he or she can register as a registered auditor with IRBA. Similar to the Institute of, or similar to internal auditing, you would register through the Institute of Internal Auditors, where you can become an internal audit technician or a certified internal auditor, amongst others. But specifically with external auditing, it's where we'll talk about the South African Institute of Chartered Accountants, commonly known as SAICA, which is an accredited professional body. So looking at the diagram, what is explained in that paragraph is explained in diagram 7. So let's look at diagram 7 just below what I've read. So it first says the Companies Act, Good Corporate Governance, and External Auditors of AFS, which is Annual Financial Statements, they all require external auditors to improve the credibility of annual financial statements. So specifically talking about external auditors, we're always referring to giving credibility to annual financial statements, unlike the internal auditor employed by the company. In some cases, it could be outsourced, where they're looking at the internal audit function or the operations of the business. And what is explained in the second paragraph of that introduction is the Auditing Profession Act requires the Independent Regulatory Board for Auditors who have outsourced education and training through SAICA, which is South African Institute of Chartered Accountants. So basically, we've got the Act, which is the Auditing Profession Act, and there is a body within that act, which is the Independent Regulatory Board for Auditors. There is a training portion to it. The training portion has been given to SAICA. Now, one thing to note from that paragraph or that diagram there is that for you to become a registered auditor, you would first become a chartered accountant. That is the education and training part, which is provided by SAICA. So once you do qualify as a chartered accountant, you would then have to go further education and training to specialize in auditing. That's where then just above that diagram, it says there, a prospective registered auditor has to undergo all the CASA education and training requirements and an additional specialized auditing professional development period of 18 months before you can register as a registered auditor. Therefore, becoming a CA, you do not necessarily automatically become a registered auditor. So in a nutshell, if you want to be a registered auditor, you first go through the SAICA education and training to become a chartered accountant. And in addition to that, further 18 months, you would then become actually further 18 months in specialized training in auditing, then you will become a registered auditor. So basically, that is what the diagram is explaining there. And just as a way of knowing what are the accounting bodies, that is contained in 8.2.2 towards the end of the page. We've got the South African Institute of Chartered Accountants, we spoke about it. We've got the Association of Chartered Certified Accountants. We've got the Chartered Institute of Management Accountants, commonly known as CIMA. We also have the South African Institute of Professional Accountants, also commonly known as SAIPA. The websites are there should you need or want to gather further information with regards to them. And then just diagram 8 is, connecting on the different accounting bodies and where the external audit function is. So at the bottom there, it says only registered auditors can perform external audit functions. At the bottom of the pyramid, we've got ACA, which is the Association of Chartered Certified Accountants, or SAIPA. And then above that, you've got CIMA. commonly SEMA, it would be students who have studied. I know our there's a qualification, for example, in national diploma in course and management accounting. Normally, those students would go through the SEMA route, as we would call it. Then you've got your become accounting students who would, after graduating, doing their honors, doing the CTA, or which is a certification for trained accountants. They would go through the institute, which is SICA, to become chartered accountants. And then, as we said earlier, to perform external audit functions, you have to go a further 18 months specialized training through to become a registered auditor, and you would register through the Independent Regulatory Board for Auditors. There is an exercise there, the nature of professional status. It says here, up to now, you have noticed that internal auditors, registered auditors, chartered accountants are referred to as professionals. But what does it mean to obtain professional status? Let's look at the 6 attributes describing professional status. I'll just touch on one or two. And this on the textbook is in the 2016 textbook, chapter 1, from page 10 to 11. Let us page through the textbook for those who are interested. Okay, apologies there. I had lost my network and I just had to quickly fix that. So as I was saying, okay, let me first have this here. Okay, still looking at the first section. As I was said earlier, we are on our chapter 1, page 10 of the textbook. So it was just confirming there that the accounting profession needs to be regarded, as a, or to be labeled as a professional body of practitioners. So we'll look at the nature of professional status, specifically describing the 6 attributes of professional status. Let's look at the first one, which says a profession offers skills and services which are highly specialized and which require particular intellectual abilities, mastery of a specialized body of knowledge through a formal education process, mastery of the application of these intellectual abilities and specialized knowledge through a practical training process. So let's use the chartered accountant as an example. So particular intellectual abilities, let's say that will be the abilities that you will learn through university. Mastery of a specialized body of knowledge through a formal education process that was specifically confirming that education. And then the application, that will be when you will be For example, you will notice if, let's say, you go to the PwC website, they do offer training contracts for certified or chartered accountants. It would just detail, for example, the requirements would be, you should have passed well, you would have done your honors, you would, have a certain, attributes or attitudes. So that would be that part. And part of the practical is that throughout your training as a CA, that is where you would gain those highly specialized skills that would be required to be in the accounting profession or to be labeled as a professional. Let's look at 1.2. The quality of services delivered by a profession cannot easily be evaluated by the public who rely on the services. In order to protect the public and the reputation of the profession against incompetence or unethical behavior in the field concerned, a profession is supported by certain regulatory mechanisms, which include the existence of laws restricting admission to practice to those who are properly qualified through the Accounting Professions Act, the existence of a strong voluntary organization dedicated to the advancement of the profession, with primary attention devoted to improvement of the services that the profession renders. This could be through the independent of registered board of auditors and also SICA. Freedom from uninhibited competition so that practice may be carried on in an atmosphere of dignity and self-respect, with adequate opportunity for concentration on the improvement of services and an active support of a code of ethical conduct through which the public may judge the professional stature of those in practice. We will look at the code of conduct. As I said, it's just an addition to what we did last week for the internal auditor. We will include professional behavior. So basically what we're saying there is, from those code of ethics, if we're living by those words, that is also what the community or, on the industry should see us, living those values. So that is actually part an activity that you would have done. I touched only two just to give you a direction of how to look at that. And then if we turn to page 56, pronouncements which regulate the auditing profession. So it says the auditors have to behave in a certain way and perform their work in terms of internationally recognized standard. As a self-study, please go through that section 8.4 and also looking at that activity 8.2, which does have a solution just below that. As you would remember, I wouldn't necessarily go through everything that is contained in the textbook, but it's more of a direction. So basically, if we can give a summary on what we touched on, looking at the external auditor, before actually even going to the responsibilities or the differentiation between internal and external auditors, we actually looked at the body responsible or the act responsible for external auditors, which is the Auditing Professions Act, through the Independent Regulatory Board of Auditors, where you would register through them. Education and training is provided by SICA specifically to become a chartered accountant. And should you further want to be recognized as a registered auditor, there's a additional specialized auditing training of 18 months to become or registered as an auditor. So now we will go on to the next section, which is assurance by the external auditor. So as an introduction, what I want to point in 9.1, it says there, in the previous study unit, we looked at the auditing profession and noticed that it is highly regulated through legislation, standards, and codes. Although auditors perform many different functions in practice, which is a non-assurance engagements, for the purposes of this module, the main function of the external auditor registered with the IRBA is to perform external audit of financial statement, that is providing assurance engagements. This is also confirmation of what I spoke about earlier on diagram 5. So we'll basically look at now what do they really do when they audit financial statements. So there is also an activity, an internet activity 9.1, where you had to go and search for ShopRite's annual financial statements, specifically going into the section where it says the independent auditor's report to the shareholders of ShopRite Holdings Limited. So there it was to note on what the report is outlining regarding the director's responsibilities, the auditor's responsibilities, and their audit opinion. And as I said earlier, or actually as I asked in the previous sections, is to always first pre-read before the class to have an idea. So I won't specifically be going into that internet activity as as a form of measure that you had to pre-read. But what I want to note is a paragraph that follows, as stated in Jackson, which is a textbook, chapter 1, page 2. Registered external auditors are auditors who express an independent opinion on whether the annual financial statements of a company fairly present the financial position and results of the company's operations. The external auditor is not an employee of the company. They enhance the degree of confidence which users of the financial statements will have in the information in those financial statements. Also, just going back one step back regarding internal auditors, remember we spoke about risk mitigation. We employed by the company, we perform the internal audit function, but then with external audit, after the year end of the company, they will be called in. The annual financial statements needs to be provided within 6 months after financial year end, and the external auditors are the ones who provide that assurance on if, for example, the financial statements are fairly stated, and we look now at the levels of assurance. So now this is when they're giving their opinion, how do they confirm, or how do they assure that the annual financial statements are fairly stated? And that is page 59 of the study guide. So it says that in terms of the international framework for assurance engagements, an assurance engagement is one in which the professional accountant, which is the registered auditor, expresses a conclusion designed to enhance the degree of confidence of the intended users, other than the responsible party, about the outcome of the evaluation or measurement of a subject matter against the criteria. So basically, this is a registered auditor being appointed to confirm that the annual financial statements are fairly valued or are fairly stated to the intended users, which is stakeholders. It could be suppliers, it could be shareholders, it could be the banks, any interested party that is related to that company. And looking at the levels of assurance, we've got the highest up to the lowest, and the highest being absolute assurance, e.g., you are certifying 100%. So this is where now looking at the financial statements or the annual financial statements. So I'm also making or differentiation with that external auditors work with annual financial statements. So remember, during the year, we still have the internal auditor. So they would be the ones who would actually making that, going back to the example of an invoice, where we are receiving an invoice, it's invoice for 10,000 Rand. We're actually seeing that, a payment of 10,000 Rands has been made. So we would, let's say, work on a month-on-month basis, looking at all the transactions that happened during the month. Collectively, come year end, we would have, a collective statements or monthly statements, which will be annual financial statements. So it's that collective of the previous financial year that an external auditor would actually go and audit or provide assurance on. This is where they will also provide that assurance that when the auditor, when the internal auditor said that there is an invoice of 10,000 Rand and a payment of 10,000 Rand, they would be certifying that that is 100%. It's true. We do see that relation or that reconciliation, and that is where we speak about absolute assurance. Moving one level down, it's reasonable assurance, meaning that The standard of the audit is fairly present, meaning from that sample that you may remember, we also spoke on you would the auditors would not have to audit each and every transaction. They always work with a sample. So even in this instance, the sample that they have received, they would confirm a reasonable assurance, meaning that the statements have been fairly presented, meaning that they do have, some sort of evidence on the representations made. Just below that, or moving one level below, moving now towards the lowest assurance, we've got limited assurance, meaning that the review, according to them, nothing came to their attention. So this would be a case of they would not have seen any irregularity from what has been posted in the annual financial statement. So, to their belief, what they see there, is reasonable. There might be a case, let's say maybe one or two, they would not have access to those invoices. Also, remember, some information may not necessarily be provided by the internal auditors. It might be another department. Let's say, for example, if they are confirming that there's X amount number of employees, as much as the auditors would have confirmed that, but they would have gone directly to the human resource department or people development department to actually see that. So saying that nothing came to their attention would be there as what has been posted or what has been provided, they do not have any questions regarding that. And then with the lowest one, it's non-assurance, that is taxation and advisory services, for example. They cannot confirm that exactly the amount that we paid for tax is exactly is. They do not specifically deal with the details of tax. For example, even with dividends, if the company confirms that they have declared a dividend of X amount to X amount to these specific shareholders, they won't go to that detail because with them they look at holistically the annual financial statements, what is provided. They're not necessarily going to each and every detail. So this is where now, let's say part of that note, for example, in the Shoprite Holdings Limited example, they may make a mention there that they hereby confirm non-assurance has been given to specifically taxation or advisory services. I haven't gone through the exercise myself, but as been noted in the internet activity, that assurance should have been provided there. So it all depends on number one, which statements, annual financial statements you have pulled through. So it could be 2019, 2018, or 2011. Not necessarily every annual financial statement report, they will give exactly the same report. An addition might be made to the director's responsibilities, or some could be deleted. The assurance could be different. Like, for example, now, if you think of companies post-COVID, the assurance would be more limited, if I could put it that way, in the sense that, what needed to be reported would be less. Let's say looking at ShopRite, the operations would be limited. For example, they would confirm that the profit posted, it is an indication of, that the business was not continuing to operate as per normal, because if you remember lockdown level 5, there were certain, departments within the company or the retail space that they could not, um, provide to sell, like, for example, non-essential services or products. So that could be one of the reasons that they could give the, as a note that, yes, there has been a decline of profits, but this is the reason why it's there. So the assurance will always be different to each and every year, not necessarily the same. Actually, there is also an activity on activity 9.1, where it's saying refer back to the Shoprite annual financial statements and just identify the level of assurance provided by their auditors. So this is actually just going to the point I've said. They would have provided the level of assurance according to those statements you had opened. And actually, there is also a solution to 9.2, where it's asking you to describe what the level of assurance in an audit financial statement entails, which is what we've just did, and explaining the meaning of reasonable assurance in an auditing context. I think I've also provided that, but you do have an example there or a solution where it's just saying that you certify or you confirm that the absolute correctness of financial information, sorry, the auditor does not certify or confirm the absolute correctness of financial information, but rather expresses an opinion on its fair presentation. That's where we talk about being fairly presented. Now, looking at 9.4, businesses subject to an audit. So when should a business be audited, and why should it be or why should it not? This was contained in the textbook, chapter 1, page 13 to 14. So let's go back to the textbook, chapter 1, page 13 to 14. So basically, what we'll be talking about now is financial statement audit engagement. So this is specifically what we call the public interest score. So there is a way that is used to determine if a company should be audited or not, and this is via the public interest score. Let me see there if there is an explanation of a public interest score. Okay, let me actually use my other resource to see if I've got, before explaining the concept, just to see if I've got like a definite explanation or definition according to the textbook before I give my own understanding. Okay, let me see. Yeah. Okay, so let me use my other resource just to give more information regarding assurance of financial statements. So it says here, financial statements provided to any person must satisfy financial reporting standards, like for example, IFRS, represent the state of business and affairs of the company fairly, explain the transactions and financial position of the company, indicate whether the statements have been audited or independently reviewed or neither, state the name and designation of the preparer of the statements, like for example, the Shoprite example, the external auditors would be confirmed who they were, and also financial statements must not be incomplete, false, or misleading. I actually don't have a definition of a public interest score here. Okay, actually I do. So it says here, a public interest score is the sum of the points allocated to certain attributes applicable to all companies. For example, 1 point is allocated to every 1 million rand or part thereof of turnover. The public interest score is used as a gauge of the interest the public at large, which is a society, has in the company. The company will be required to satisfy various conditions dependent upon its public interest score. For example, a company with a score of at least 350 points will have to be audited externally. So it's more of like goodwill to the company. How would you put a value to the public's interest towards that company? And that is what is meant by a public interest score, and depending on the score, it will confirm whether it needs to be audited or not. That is basically explained on page 13, but if you look at the second paragraph where it has got the asterisks, it says there, as you would expect, the score is based on factors which generally determine the level of interest the public has in the entity. An entity's public interest interest score will thus be the sum of a number of points equal to the average number of employees during the financial year, 1 point for every 1 million rand or part thereof of turnover, 1 point for every 1 million or part thereof of third-party liability at year end, and 1 point for every individual who directly or indirectly has a beneficial interest in any of the company's shares or members' interest. Putting a value to it, this is on page 14, looking at that chart there, which summarizes the public interest score. So based on the four criteria that I've just read, if the public interest score is less than 100, then it means for the company a review would be needed, not an audit, but a review. Now, in a case of a close cooperation and owner-managed companies, no assurance engagement required. So basically, a review would just be a matter of, confirming that what has been presented is fair, and that's just it. You don't need to do a whole audit of the annual financial statements. It's just a review. If the company scores a point of 100 to 349, if the annual financial statements are internally compiled, which is, let's say, for example, by the finance department, by the audit accountant of the company, then those companies needs to be audited. Also, for close corporations and owner-managed companies, audit if annual financial statements are internally compiled. If the annual financial statements are externally compiled, meaning that the company is outsourcing the compiling of the annual financial statements, let's say, for example, through a specific company, it could be a private company, then a review would be necessary for that company. But if it's a close corporation or owner managed companies, which are private companies, no assurance required if annual financial statements are externally complied. That is basically, that function has been done by that external company. But if the points are 350 and more, it means that the company needs to be audited regardless of who compiles the annual financial statement. So this is basically a company that has got a big goodwill, or an increased goodwill in the company, sorry, in the society. For example, let's look at Telkom. It's a big company. They've got a huge turnover. Let's say, for example, if their turnover is 400 million, and you are appointing 1 point for every 1 million rands, that would mean that just looking at the profit or the turnover of 400, that is actually more than 350 public Okay, apologies for that. I just keep on losing my connection. So now and again, I just have to go and refresh it. Okay, so I'll be sharing my screen again. Okay, thank you. So I'm looking at the last part there. I'll just read through as a summary of what we've just covered. So the financial statement audit engagement. So it says here, close corporations and private companies with a public score of 350 points and more are subject to a financial statement audit. All public and state-owned companies, regardless of their public interest score, are subject to a financial statement audit. Private companies with a public score between 100 to 349 who compile their own annual financial statements are also subject to an audit, and as mentioned earlier, the level of assurance provided by financial statement engagement is one of reasonable assurance. So the external auditor always wants to confirm, reasonable assurance. However, it just all depends on what has been presented to them, and also, what they can confirm. So before we look at the next session, can we take a 5-minute break? Now it's 1:27 at 1:32. I'm just going to try and sort out my connection so that I don't have disturbances before we move on to the next session. Also, in the meantime, I will post the link to the attendance register. So for those who joined us a little bit later, they do have access to it. So Ethan, actually everyone, just to confirm, as I said, I do get a signal on my side if I've lost connection. So Ethan, I do see there you were asking, if the video did cut for everyone. So I will, as I said, taking that 5-minute break now until 1:32. I'll just try to refresh my router so that I don't get the disturbances. So we can take a 4-minute, actually a 3-minute break now because it's 1:29. Okay, everyone. It's 1:32 now, so let's continue. Actually, just before we continue, as a summary of what we've just covered. So we introduced the external auditor. We looked at, how they came into being, what is the act they abide by, which is the Accounting Professions Act, and the responsible body is the Independent Regulatory Board of Auditors. SICA was also in the picture, where they provide the education and training. We also looked at, what are the other accounting bodies. We looked at, what types of assurance do they provide regarding annual financial statements. We also looked at which companies, according to the public interest score, should they do an audit. If not, those companies, a review can just be done. And what we will look at now is the professional conduct required of external auditors, which is the second last part before we do the relationship between internal and external auditors. So the professional conduct requirements, as I said, it's very similar to what actually a bit we touched on last week. Let me go to that document again, which is this one here. Actually, before I continue with those two documents, specifically the document I downloaded online, the IPPF Code of Ethics and All in a Day's Work, I've saved them. Let me show you how to access them. So I would go on to my UNISA, just waiting for it to open. Connection actually is a bit slow. Okay, let's go there. So the view might be a little bit different on the way you access the information, because our rights are different, but you log in as per normal to my UNISA. Okay, and then I'll click on TAT classes. So you've got an option, either you can click on notes and recordings there, or you can click on the module code. And then specifically all the information related to this class is here. So for example, if you in a cafe and you don't want to log in on your emails, or to get access to the session, you can actually click on there. Then resources and recordings will be there. I'll just go into it now. So recorded sessions are here. For example, session 1 on the 29th of August, this is what we covered, and this is a video. Session 2, that was last week, we covered the internal auditor, and this is a video for it. So this is where the videos are. But looking at notes, click on the Open Class Notes folder. It's going to open in a new page. And the way that I've saved the information is specific to that session. So it will be under semester 2, which is this session. And then it was session 2, that was last week's session. So if, for example, there's something I'm going to upload for session 3, I will create a new folder, which is session 3, and I'll put in today's date. So last week was the 5th of September. And then those are the two documents there, All in a Day's Work and the IPPF Code of Ethics. So this is where you would get those documents if, for example, you do not know how to get them. And then going back to the code of ethics, just touching a bit on them since we did touch them last week. So first we looked at the principle itself, and then we looked at the rules of conduct, which is the detail of that principle. So the first one was integrity, that we looked at the integrity of internal auditors establishes trust and thus provides the basis for reliance on their judgment. This is when I talked about always doing the right thing, even if no one is watching, and the detail or the rule of conduct is you shall perform your work with honesty, diligence, and responsibility. You shall observe the law and make disclosures expected by the law and the profession. Looking at principle 2, objectivity, you need to exhibit the highest level of professional objectivity in gathering, evaluating, and communicating information about the activity or process being examined. Part of the rule of conduct, you shall not participate in any activity or relationship that may impair or be presumed to impair their unbiased assessment. This participation includes those activities or relationships that may be in conflict with the interests of the organization. That is, don't allow yourself, don't put yourself in an unbiased situation, like, for example, accepting a bribe, and as a result, you won't be objective in the report or in performing your function. For example, if you, as I made an example of the CEO, let's say maybe there was fraud or corruption that was done, and the CEO would come to you and actually tell you that, look, I'm gonna buy you a house. Don't report on that financial transaction. If you do not report it, number one, you would not be having integrity because, as we said, part of the rule of conduct is you always need to abide by the law and the profession. Also, objectivity is there, that your objectivity was impaired. Looking at the third one, confidentiality, you need to respect the value and ownership of the information that you receive and do not disclose information without appropriate authority unless there's a legal or professional obligation to do so. This is when we talked about some institutions have got um, a fraud hotline where any stakeholder can report fraud. For example, you're having a meeting with one of the directors and there's some fraud that they introducing to you. You do have to report it, especially as an internal auditor. Even in this case, an external auditor, it does apply to them as well. We also have people called whistleblowers. It's just any random person who does know that, look, there has been fraud or corruption that is happening. There is, they would be referred to as whistleblowers. And unfortunately, with whistleblowers, as much as, let's say, the state, would say that you would be protected, or the organization would say, your identity would be protected. But I always feel there's a way, of that information going to the people who committed that fraud and corruption. And thinking of an example, during the 2020 World Cup, there was fraud and corruption regarding the building of stadiums. And I remember there were cases where, whistleblowers were even, gunned down, because of they actually blew the whistle on what was happening. Some are even in hiding what is happening in KZN, people are whistleblowers, but they're not protected, and they end up, being, taking the fall for their honesty, or wanting to do right. So it's it's a, I don't want to call it a tough matter, but it's like it's a call for concern, So most probably, the organization does have good compliance regarding whistleblowers. And then we also looked at competency, that you need to apply the knowledge, skills, and experience needed in the performance of internal audit services. And looking at the role of conduct, you shall engage only in those activities for which you have the necessary knowledge, skills, and experience. Don't say that you have been an assistant manager for 5 years. You can take on this project, but that is not the case. You're not living according to the principle of competency. You shall perform the audit internal audit services in accordance with the international standards for the professional practice of internal auditing, and you shall continually improve your proficiency and the effectiveness and quality of your services. This is where we also spoke about the Institute of Internal Auditors, specifically with internal auditing, where we can go for continuous professional development, commonly referred to as CPD, where you can go to seminars or workshops where they're always, doing updates on what is happening in the industry, similar to what SAICA would have as well. They would have those seminars in relation to external auditing, specifically chartered accountants. One principle or profession that we needed to include specifically for external auditors, although I do feel it also relates to internal auditors as well. This is on page 63 on the such asset solution to 10.1, number 5, which is professional behavior. This is also on the textbook. This is chapter 2, from page 5 to page 8. Let me just turn on to chapter 2, page 5 to 8, and then we'll see what has been noted here for professional behavior. Um, okay, professional behavior. This is section 150, which deals with the number of metals under the heading of professional behavior. So much of what has been included in the section was added by SAICA to tailor the section to satisfy the needs of the South African profession, and it deals with the general, explanation of the principle, the publicity, advertising, and solicitation, but will specifically look at, the general explanation, and it reads as follows. The fundamental principle requires that chartered accountants comply with relevant laws and regulations similar to Principle 2. Avoid any action which the chartered accountant knows or should know that they may bring discredit to the profession, which is acting in a way which negatively affects the good reputation of the profession as judged by a reasonable and informed third party taking into account the specific facts and circumstances available to the chartered accountant at the time of his actions. So this is more of integrity in type of a way. So the way I would like to put professional behavior, it's sort of like a collection of all the other principles, and just generally, as in your own personal opinion, is to treat the profession in a modest manner. Even if you are saying that you are a chartered accountant, you abide by these rules, that should also form part of your personal life as well. Because if you think about it, let's say you are a well-known, auditor, and then external auditor, let's say maybe you are the, spokesperson for PwC, and something happens in your personal capacity over a weekend. When it's being reported, it will likely not be reported on a, personal capacity, but on a, what will be noted is that this person works for PwC as a spokesperson or as the senior auditor, and that is where we talk about that professional behavior, also linking it to your personal life or lifestyle as well. What has been given in the study guide is to avoid any action that will discredit the profession. Examples could be bad advertising, signing your own reports, manners when recruiting, responsibilities to colleagues, discrimination. All those things, you need to abide by, or you need to, have a professional behavior towards it. So I've touched on actually what has been required in activity 10.1. It's just a matter of you going to fill in the spaces. But now we're going to look at the threats and safeguards of, what could hinder you in, providing the principles or acting in the manner that we've just alluded to. And threats are contained in the textbook in chapter 2 from page 10 to 11. And let's look at some few. So threats in the textbook start towards the bottom of the page. And the first one is self-interest threats. First, self-interest threats means that threats that a financial or other interest will inappropriately influence the chartered accountant's judgment or behavior and lead him to act in his own self-interest. For example, a chartered accountant has shares in an audit client. Now, with objectivity there, if you think about it, if I'm auditing a company that I've got shares in, definitely I will always try and put in a good word, for the company, that look, everything has been fairly valued, and that is a threat. You've got, an interest in that company as a result that you are not objective in you providing, that audit function. So your objectivity would be impaired in that instance. So I'll just touch a bit on all the threats. The second one is self-review threats. That is threats that you will not appropriately evaluate the results of a previous service performed by the chartered accountant or by another individual in his firm on which the chartered accountant will rely as part of a current service. For example, the former financial accountant of an audit client recently resigned and joined the firm which conducts the audit of his former employer. He was placed on the audit team for the current audit. Objectivity and professional competence and due care, and those are the threats that that will be in that instance. So what it means is, I have been working for, let's say, for ESCOM. I as an auditor, and then I go and work for the Auditor General. Then immediately when I join them, I am the lead auditor for auditing that company that I used to work for. In that instance, I'm actually reviewing the work that I have done, and that is where we're talking about that threat, or a self-review threat. The third one is advocacy threats. Threats may arise when a chartered accountant promotes a client's position to a point that his subsequent objectivity may be compromised, e.g., a chartered accountant values a client's shares and then leads the negotiations on the sale of the client's company. So this is an instance where I'm an auditor for this company, also knowing that I do form part of, let's say, for example, the a shareholders committee, within the company or the executive management. So now what I'm basically doing is I'm valuing the company high so that when we actually, selling shares, we can always get more money, from the public or from the investors. So this is where we talk about advocacy threats. Familiarity threats, intimidation threats are the next two. Familiarity threats is threats which may arise when, because of a close relationship, a chartered accountant becomes too sympathetic to the interests of others. That could also be a case of friends with the CEO, and look, as much as I do know that the company is not doing well, but I feel sorry for him. I try to, cook the books, as we would call it. Um, Next one, intimidation threats. Threats which occur when a chartered accountant may be deterred from acting objectively by actual or perceived pressures, e.g., a chartered accountant in business fails to report a fraud perpetrated by his section head because he fears he himself will be dismissed by the section head. For example, you you an audit, you a team lead of of the audit that you have been providing, and somewhere somehow you picked up that the chief audit executive has been doing fraud, with let's say with the CEO. So as much as you don't want to be charged for insubordination, you do not report that, because you reporting it, there might be a chance where, look, you will be out of a job because you're reporting on your boss, and that is where we talk about intimidation threats. There is also an activity asking you to list the 5 threats. Actually, that is what we've just covered. But also at the same time, there are safeguards, things that we can safeguard ourselves with on those threats. And this is on still on chapter 2, page 12, and let's look at that. I'll touch on just a bit. So, in summary, part of the safeguards is, as much as there are threats, but there are laws, there are procedures on ways to safeguard yourself. Like, for example, if you need to if you need to safeguard yourself, around, let's say, part of the Auditing Profession Act specifically says that the moment you pick up that there is fraud involved, you must report it to the next level of management. As part of the act, regardless of, there's intimidation threats, you need to report that. That is what the act is saying. So even in a case where, there might be intimidation threats, but as your backup, as your safeguard, the act says this is what you should do. And actually, in that instance, you are safeguarding yourself on that. But let's look at what the study guide says. So it says, rather be safe than sorry. The auditor is obliged to apply measures that will reduce the threat to an acceptable level, and safeguards are divided into two. Safeguards created by the profession, legislation or regulation, what I've just alluded, and safeguards in the work environment. The first category is regulatory measures brought about the profession and legislation. For example, the auditor must rotate after 5 years to enhance objectivity. These are rules and must be complied with. The other one could be, if you are a registered auditor, you are working for this company and you change, roles, and you work, let's say, for example, for Auditor General, you are not allowed to audit that your previous employer's books within 5 years after you making that move. That could also be another way of safeguarding yourself. The second one is how the auditor manages his or her business that will contribute to good management procedures. This is basically, leaving specifically the ethics. If there is a need that you need to whistleblow, you need to do that. If you're suspecting fraud, you tipping off, you need to avoid all those threats so that you can always safeguard yourself. There is an activity just asking, or actually, telling you what the threat is and also what are the safeguards that you have, and that is activity 10.3. You can do that as a self-assessment because there's a such a set solution to that. Before we end, we've got 5 minutes, and let's quickly look at page 67 of the study guide, that is listing the differences between internal and external auditors. We had touched a bit on this, so it should be fairly easy. Just as a confirmation or how far we are on our session. Okay, so while I'm just getting that on, so looking at the differences between the two, looking at internal auditors, they obtain a mandate from management or the audit committee. So remember, we spoke about the chief audit executive being part of the executive management. The mandate always comes from them. For example, a mandate would be when there are fire drills in the business, they should be there to check if everyone is complying. They need to check that all the emergency doors open automatically, fire extinguishers are placed where they need to be. External auditors, they obtain a mandate through legislation, that is the Accounting Professions Act, according to the public interest score. If it's 350 or more, they need to audit the books, the annual financial statements of that company or those companies. Internal auditors, they perform a management function. External, they perform an external attestation function or auditing function. So attestation is that assurance. Internal auditors are contracted by the company they are working with. Sometimes it could be outsourced. External auditors, they work for an independent audit firm, PwC, Ernst & Young, Grant Thornton. Internal auditors function independently in the organization but remain part of it. That is where we looked at diagram 5. If you remember, they were on the side of, of the structure of the business. So they act independently in that sense. They're not influenced by anyone, but they do actually still form part of the business. External auditors, they function independently from the organization because they're independently appointed. Internal auditors, they report to management, including the audit committee. External auditors, they report to the shareholders slash stakeholders. Because remember, with annual financial statements, specifically with public companies, part of the Companies Act, it says that they need to make their annual financial statements public. So meaning by stakeholders, even me as a customer, I can go and search for Shoprite's annual financial statements to see what has been reported on. Internal auditors, they cover all the organization's operations. Unlike external auditors, they work primarily with the financial systems that have a bearing on the final accounts, specifically financial statements. Internal auditors, they perform audits throughout the year. External auditors, they tend to be at year end, even though some testing may be carried out during the year. So let's say the memorandum of incorporation for that business, they say that half yearly we need to call in the external auditors, and then as per now legislation, even after year end, they need to come in again. And as I said, they generally need to do this within 6 months so that they can provide those statements to the public after the financial year end. Generally, some businesses would, according to the memorandum of incorporation, they would do that within 2 months. And then lastly, internal auditors are registered with the Institute of Internal Auditors, AD would read on. And then with external auditors, they are registered with the Independent Regulatory Board of for auditors, as we had touched on. And the last part there is using the work of internal auditors and coordination by internal auditors. So basically what it says is, how reliable should an external auditor use the information provided by the internal auditor? So obviously, the internal auditor will always base the information provided by the different business units. For example, facilities management would provide all the information regarding where the fire extinguishers are, where the fire escapes should a fire drill happen. Um, so they will always gather that information from that specific department and report on it. And then in turn, the external auditors would rely on the information provided by the external auditor. So basically, the coordination between the two is, they always have to work hand in hand. And this responsibility lies with the chief audit executive. So remember, still in the diagram, the chief audit executive, they are the ones responsible for the whole audit function, internal and external. So they need to coordinate what has been reported by the internal auditors and also what is being provided assurance on by the external auditors. They will be providing that function, and that is, as brief summary, is given on the coordination of internal auditors and the last section of the relationship between internal and external auditors. As I've said, it's just a summary, is that coordination that they need to work hand in hand. If even internal auditors can learn from information provided by external auditors. Also remember, the internal auditor will always provide, assurance on what is happening in the business, and the internal external auditor provides confirmation of what has been reported on by the internal auditors, but specifically with with the annual financial statements. So basically, those two functions must talk together. The external auditor mustn't come and say, "Hey, actually, what has been reported by the internal auditor is the opposite." They must talk to each other, and as I said, the chief audit executive is responsible for that function. I don't know if there are any questions, but before I take any questions as confirmation for next week, we will be looking at auditing concepts. Basically, if we're talking about audit, what it entails, if we're talking about an engagement, what it is, if we're talking about audit working papers, what are we talking about? And then this is the time for any questions on my side. I will paste the link for the attendance and the feedback form, and then I can take any questions. And this would be on what we have covered previously, including today's sessions, and if needs be, that I need to go back and look at the information again, I will definitely do so and provide more detailed information. I'm not sure if there's a class after this one, but I'll be here until 2:05 to take any questions. Okay, since there are no questions, thank you very much, everyone, and we'll definitely continue this next week. Have a good afternoon.